All righty. Hello. Welcome, everyone. We are thrilled to have you here for Bruce Marshall's 14-day options income formula. Tonight, you'll see exactly how Bruce targets consistent weekly gains in this unpredictable whack-a-mole market with three of his favorite low-stress options plays. Bruce is a 36-year trading veteran and former Wall Street fund manager who's outperformed the S&P by an incredible 220% this year alone. He's going to pull back the curtain on his top three swing trades for 2025, show you how to avoid whipsaws, and share the formula behind his 12 years of uninterrupted profitability. Let's dive in. Please welcome the man himself, Mr. Bruce Marshall.
You, Daryl. I appreciate that. Welcome, everybody. Let me move this clock over here and we will get started. All right, all right, all right. Good to see everybody. I was looking at the chat, seeing people from all over the place in here. That's always fun to see where everybody's here from. So, again, welcome. Glad you are here. Tonight, we're going to talk about the 14-day options income formula. Think you're going to get a lot out of this. Take some notes as we go. And we'll jump right in. So, first of all, of course, you have to have a disclaimer. You can lose money trading, etc. We're not going to promise any profits or anything like that. But what I am going to show you is exactly the process that I follow. So I think you guys, again, will get a lot out of this. So hold questions to the end if you don't mind, and we will have plenty of time for Q&A at the end. So this is a chart of the SPX, right? And when you look at this, of course, this is year to date, or actually right there is the start of the year 2025. And when you look at this, is this a problem or opportunity? Because again, this was, remember the Santa rally, and we were all excited. This is such easy trading here. And then all of a sudden, one shoe dropped, and then the other shoe dropped, and then another shoe dropped, and, just kept going. So it turned into be a messy, um, really messy kind of first part of the year. And then we're off like a rocket here, and we're up like 30% off that low. So is this a problem or opportunity? And especially earlier in the year, I talked to a lot of traders all the time. Everyone was seeing this as a big problem. And yes, while it was not as easy to trade as, something over here, there's still a lot of opportunity here. So what we want to do is try to figure out how to isolate volatile markets and identify those markets so that we can figure out how to trade them better, right? So we're halfway through 2025, right? This market, if you look at this, I posted this actually a couple of times, and I think I even did a video on it. Are these the same charts? And if you look at this on the surface, they look identical. I mean, identical, right? Well, guess what? This is 2025. This is 2020. This is COVID. And same thing happened. Big shoe dropped out of nowhere. The end of the world was coming. Everybody, put on a mask and go buy toilet paper and all that kind of stuff, and stand 6 feet apart in line to get the toilet paper and all that, right? And then as soon as, we bottomed out down here, we were off to the races again. Same thing here. This was tariffs, right? Bottomed out down here, and then we're off to the races again. Very, very, very similar charts. In fact, I believe, and we've talked about this a lot in the trading rooms, I believe you see this after we came back to the prior high here, we had a period of consolidation, then we're off to the races again. I think that's what's going to happen here, and we're already kind of seeing it, right? So what that means is, again, we're halfway through the year, and I think there is a lot of opportunity to be had in the next 6 months or, and going forward. So I want you to be able to take advantage of that and to be able to, know when to get in front of it or not, right? So again, just want us all to be ready for that. So in this webinar, we're going to talk about how I've beat the S&P by 220% so far by using three super easy low stress strategies. Now, this sounds pretty good and sounds pretty cool, and I am proud of it. It's good, but I'm not. This is not anything out of the ordinary. We've been doing this year in, year out for many, 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 many years. I'm not saying that to be cocky. I'm just saying that there is a methodology and a process to follow. So you don't want your P&L, great year, bad year, great year, bad year, great year, bad year, great year, bad year, and you end up kind of where you started, right? We want lower left to upper right. There will be some hiccups along the way, but we want a generally uptrending lower left to upper right, right? So that's what gets you your consistency. And when you get consistent, you get confidence with any market. Doesn't matter. It doesn't matter. People are like, oh, I bet you're freaking out about the market. And I'm like, no, not really. I know what I'm going to do the next day or the next week or the next 14 days, 3 weeks, that kind of thing. And how you do that is how you adapt your way of thinking more like a fund manager, right? Not a gambler. You're not coming every day going, what am I going to trade? And I'm going to put all my chips on the table here, that kind of thing, right? So we need to trade smarter and not harder, especially in these volatile markets. We don't want to get chewed up, right? So if you think in a different way and think more like a fund manager, that is the giant step number one to getting there, right? There's no guesswork, right? And again, we're looking for consistency. So why listen to me? And who am I? If you're not from Simpler, you may or may not know me. I've been around a long time in the business. I've been 36 years in the business, on both sides of the fence, institutional side, retail side as kind of a wealth advisor, worked on a bond desk for a while. I've kind of seen it all. Managed over 150 million. Uh, and the funny thing about this is that this was in 1998. That was kind of the peak of when I was managing. This is retail money too. This is not institutional money. Um, Convert that into today's dollars, and it's, two and a half, three times that. So it was a pretty good amount of money at the time. Now this is me over here, and this is, you saw my picture on the first thing. This is when I had hair, and this was back in the old days. I think this is about 1998, and you can tell by the big, 40-pound compact laptop. You guys remember compact computers? Well, that was our laptop. And this was a trading group that I was with for many, many, many years. So fast forward to Simpler days. I came to Simpler when we were still just really kind of getting off the ground. Um, a lot of funny stories back in those days about getting started and working out of John Carter's house and all that kind of stuff. It was fun. It was really cool. But I created Bias, which is Bruce's income accumulation system, basically a trade service, right? Run it for 12 years since 2013, never had a down year, 12 years uninterrupted profitability. Not to say I didn't haven't had losing trades, of course, had losing months, but we've never had a losing year. And again, this goes back to the consistency, and that's what we're all, trying to get. Now, back in the day when I was on Wall Street, and I don't really know why it just kind of evolved like this. I really enjoy teaching and telling people, you know, how things work, and I have an engineering background and all that kind of stuff. So I think I'm pretty good at it. And at two or three of the different firms that I was trading for, wanted me to train the new money managers when they came in. And so I said, sure, I'll give it a try. And then I became the go-to guy. And that's one of my claims to fame. I've traded, I've trained, I don't know, thousands of people over the years, So fun stuff. But, again, you kind of go through all the motions of when you're working with people and trying to train them as far as how people think and what they think about trading and trying to get people to be consistent, all that kind of stuff. So my goal has always been simple, try to be as consistent as, low stress as possible. And today we're going to talk about that. So the real problem in 2025, and I could put, 2020, any of these crazy years, I traded through all of them, 2008, housing crisis, 2000 dot-com bubble, I've traded through all that stuff, and it's always the same. If you have a plan in place and you have a process, you have a methodology, you don't worry about it. You just trade what you have right in front of you, right? Markets are way too wild for static strategies, meaning, I talk to a lot of people, what do you trade? I buy calls all the time. Okay, well, that's great. What happens when the market turns against you? Well, either you don't trade or you lose money because it doesn't work all the time, right? It doesn't matter what your favorite, quote unquote, favorite strategy is, nothing works all the time and nothing ever works the same each time. Unfortunately, it's just the way it is, right? So a lot of people will guess, have no idea. They come in the morning. What do you want to do? Oh, let's, Nvidia looks good or Tesla looks good or whatever. Let's just go for that. And of course, that's not the way to do it, right? There is a lot of FOMO, especially in the last 3 or 4, 5 months. We've seen a lot of that is good, and we have all made money chasing some of these trades, but there's a difference in strategically chasing based on assumptions or chasing because it's a meme stock or something like that. And then lastly, over trading, right? And, all this stuff has applied to me over the years. I've had wild swings in portfolios over the years until I kind of figured it out. Everybody does. This is not an easy game for, for beginners, I suppose. It just, there's a learning curve to it, just like everything else. If we said, we're going to learn how to do, heart surgery, whatever, there's a process you go through, right? It takes a little while. That's just part of it, right? But you need a clear path for managing risks, which every trade has risk associated with it, and then being able to adapt to quick market shifts. And that's what we've seen. And we will continue to see that stuff because now we have X, Twitter, CNBC, TikTok, Instagram, all that kind of stuff. Information travels at speed of light, right? So I mean, it is not going to get any more calm, right? We have algos, high frequency, all that kind of stuff. And that can be good if you get on the right side of it, right? So if you've ever felt like this, like it's just too wild, it's out of control, whatever. I mean, I've been there with you and of course it's still, things get wild and we have crazy wild days, but you have to keep everything in context, right? So what we're dealing with, honestly, it's not a strategy problem. Should I use this or that? It is a thinking problem of getting your mind in the right place of how to deal with it, right? And what changes everything, again, it if you think like a money manager, right? Not a gambler, that is the mindset that you need to be in. And there's a lot, we're going to break this down as we go. My fund manager formula is a very structured, repeatable decision-making process. It's a process, right? It's not a quick fix. And I will say this, everything that we're talking about will fluctuate depending on how fast the market's moving and, volatility and things like that. But again, the whole point is that we're not guessing, right? So here is the core. This is why you came. This is the fund manager formula. And we're going to go through it, right? So again, we're not making assumptions. So we'll start here. Our little wheel goes this way, right? So number one is to get a read on the market. Now, what does that mean? A read on the market means that is the market directional straight up, straight down? Is it sideways? Is it chopping? Basically the market normally over any length of time is going to stair step up. You've heard this a million times. We're going to stair step up, and guess what comes down? We're going to elevator down, right? And then we're going to start stair stepping up again, and then we're going to elevator down, and we're going to ultimately go this way, right? This stuff in between is just noise, right? Don't worry about that. Now, when you get into a space in time, a small window of time where we're going like this. Now that's different. That's hard to choose, but we typically tend to be range bound in some, even if it's a wide range, we can still kind of have some parameters on where we're going, right? So all we're trying to do is figure out the general direction of the market. This is not pinpoint. We're just general direction of the market. Then how fast is the market moving? Are we going, full on 100 points a day, 100 points a day, 100 points a day, 100 points a day, 100 points a day? Are we 25 down 5, 25, down 5, 25, down, very slow, methodical, right? Very different markets. And though you trade those differently, right? So fast or slow market, how do you think it's going to go? If you had to look up here and say, oops, if you had to look up here and say, where are we likely to be in 2 weeks, 3 weeks, 4 weeks? Would you know? Could you guess? Would you have a reasonable guess? That kind of thing. We're going to talk about indicators and all that and how it helps as well. So that's number one. Number two, identify solid candidates. We got to throw out the junk. And one way to do that, if the market's going straight up, like it has been, right? You want to buy the leaders of the market, what's going up. Oh, this down here, this I talked about it today. I don't want to throw anything under the bus, but UNH, here's the 200 day. We're way down here. The chart looks like this in a market going like this. Do we want to do this? Yeah, maybe for a lotto ticket speculative kind of thing, but that's not, the leaders are going to continue to lead, and those have been Mag 7 kind of stuff. I mean, it's actually been pretty broad. I've gotten a lot of good trades from a lot of stuff that's not Mag 7. So, there are different ways to identify those. So we eliminate the junk. We look at what sectors are doing the best. Is it, ironically, utilities, et cetera, have been doing well because the build out about the AI and all that kind of stuff, right? Financials, of course, technology, but you watch the money flowing in and out of sectors and you avoid the ones that the money is flowing out of, right? That's your kind of number one thing. You start there, right? Because if you're in a sector that the money is flowing out of and you have the best stock in a losing sector, does that really get you anywhere? Yeah, probably not. So be aware of that. Again, I watch money flow a lot. And on candidates, we're looking at the market, we're trying to identify candidates, and we want to trade the market we're in. I had a mentor that used to tell me this all the time, and he would say, trade the market you're in and not the market you wish you were in, right? And all that means is we wish we were in this market. This is easy, right? If you're in this market, you got to trade this market. You can't trade this market because you're not in that market, right? Same thing with stocks. Again, pick names that are working and avoid the ones that are not working in the current market, right? Pretty straightforward. So that's number one. We go to number two. Number three, we've got to develop a plan. We've identified candidates, and I start with everybody's different, but I start with about 50 and I take that down to about every one of these. I forgot to mention every one of these. There's a decision tree, right? Of this, make assumptions here, make assumptions there. Same thing here. We got 50 candidates. We're going to narrow that down. The first, we can look and just say, for me, if something's on the 200-day moving average, 200-day, if it's under that, you're out, right? So we narrow this down to 40. And then I want something that's above the 34 EMA. I'm just, example, right? Etc. And this gets me down to 20. Out of those 20, I look at charts, and some are coming into a lot of support for bounce. Yes, I like you. Some are here, support's way down here, and resistance is up above it. And I don't think so unless I'm going to short it down. So again, identify solid candidates, right? We're going to go in this a little deeper dive, but um, 1 to 2, 2 to 3. So develop a plan. So now we have our candidates. We have 10 candidates. We narrow that down to 5. And we say, okay, which one of these looks the best? Start with the best one, right? Of course. And we got to develop a plan. What's our price target? How do we come up with that price target? Right? We're looking at charts. We're looking at moving averages. I'll keep it really simple. Moving averages, ATRs, whatever you use. And again, I'll show you what I use as we go. But what's our price target? How do we come up with it? What's our time frame? Okay, the stock's at 100. I think it's going to 120. How long is it going to take to get there? I don't know. Well, you better know, right? Well, maybe it's going to take 4 weeks to get there. Well, it reports earnings in 2 weeks. So that just blew your whole theory on this stock, right? Unless you're trying to get a run into earnings or something, right? Know that stuff. You got to know everything. You got to do a lot of detective work, right? Um, and again, how fast that move going to happen. So we have got a read on the market. We've identified a handful of candidates. We develop a plan with our number, this is with our number one candidate from here. Now there will be number two and number three and number four, and we'll come back and lather, rinse, repeat, and do it again, right? So now that we've got our great stock we think is going to go to wherever in whatever time frame, now we got to decide on a trade strategy for that situation. So I'm bullish or I'm bearish. You can do either way. It doesn't matter. I'm bullish, I'm bearish. Because you can bid on either side of the trade, right? Think about our tools in the toolbox. What's our risk reward for the trade, right? We look at an iron condor and we say, well, we're going to risk, you know, 5 to make 1. And, let's look at some long calls. Well, that looks good, but I'm not sure what time frame it's going to take to get there. And that doesn't work. Let's look at other things, butterfly, whatever. And we decide on the strategy. We decide that based on volatility, what, volatility is doing, etc. Then we compare and contrast our top 2 or 3 type trades based on risk reward. This one I risk 1,000 to make 2. This one I risk 1,000 to make 3. This one I risk 1,000 to make 8. Okay, well, that probably tells you which one you should look at, right? Once we decide that, then we implement the trade. We monitor the trade. You have to monitor the trade and you have to manage the trade. And by managing the trade, I mean, what's our profit target? Well, if it gets to this price, I think we'll make, $1,000, $5,000, whatever your number is, right? Okay. What happens if you overshoot it? Well, it's a butterfly, so I might lose some, right? What if it doesn't get there? Would you be happy with 500? Yeah. What if it goes the other way? You're going to lose 6,000. That's not a good risk reward, right? That type thing. So we have a plan in place. We go ahead, take the trade. We monitor it as we go for price levels. If it breaks below the support, we're going to get out. If we lose more than $750, we're out. If we lose more than 4%, we get out. There's a lot of ways to do it, right? On the upside, here's my target. Here's my stretch target, target 1, target 2, target 3, that kind of thing, right? Pretty straightforward, right? So you have a plan for each scenario. What happens if it goes up? What happens if it goes down? So now that we have the wheel in place of the fund manager formula, what are the strategies? Again, honestly, in this market, I can do the most complex strategies out there. Not necessary, honestly. Most of the time, it's not necessary, right? So I went back and look. I track all this stuff. You need to track all this stuff. I tracked year to date, and I track every year. What type strategies do I use the most? What's number one? What's number two? What's number three? Which ones pay me the most, right? It can be the most often used, but it may not be the most profitable, right? So the 3 low stress strategies that I use most often, number one is the call diagonal. Now, call diagonal, if you've never done one, might seem a little much, I guess. It's not. It's pretty straightforward. It's like anything else. You probably thought, all of us, I have little kids, so I relate everything to kids. You know, my daughter's trying to ride a bike. She's, I'll never get this. I'm like, well, you do it, 4 or 5 times and you got it. And she did, and she does. So same thing. If you've never done one, it's going to look a little weird, but you do a handful of them and you get better and you like, man, that's such a super cool trade. So why I like them, they're very flexible. They have a very great risk reward. I'm going to show you. They're easy to scalp. I like to use them if I have a pretty specific target, and I don't like to use them if I think I might overshoot. And I'll show you what I mean here. So here is an example. So in this case, and again, it's a very, very flexible trade. So in this case, I just set this up yesterday, day before, yesterday, yeah. 3 contracts. They're a buck. So I've got $300 of risk down here, right? Max. If we go this way, what's my max profit up there? About 6,000, over a little over $6,000. Now, if you overshoot up here, there is more risk, but you're at a profit all the way through here, and we would just close it. Once you get to the center, you just close it, right? At a profit, right? So, and you might look at that and go, well, that looks just like a broken wing butterfly. Yeah, it's pretty similar, but a broken wing butterfly is more like this. You have less profit here, you have less width, much less width, you have more risk here to get this kind of pricing. So this is a very, very cool trade. I use them all the time. They do typically work better on SPX. We've used them on NDX, and I've used them on everything. IWM, RUT, diamonds, whatever. You can use it on Amazon, NVIDIA, whatever. Maybe the structure is a little bit different, but very straightforward trade, right? Great risk reward. So that's trade number one. Trade number two is a debit spread. And you might go, man, that's just simple, super simple. It is. It is very, very simple. But on a debit spread, you have defined risk. I like buying calls as much as anybody else. But with calls, if you go out and buy calls that are 15 bucks a piece and you come in the next morning and your vehicle is down a lot, your $15 goes to 3 real quick, right? Can't happen on debit spread. You have capped risk. Whatever you pay for, the debit is the max you can lose, right? So that's why I like them. If I don't have a solid target, that is 90% of the time I'll use a debit spread, and I'll show you why in just a second. And when not to use them would be if you think there is what I like to call an outlier status, where a vehicle may do much better than you think. You got capped profit too. You got capped risk, but you have capped profit. So in that case, I would not use one. If I thought, in other words, I thought we are going to have a 2x move or 3x or something like that, right? And here's an example. This is actually, I did this in the trading room here. I did this exact trade. Um, Same thing, 3 contracts. And you can, when we post these trades, you can size them up or down. I'm trading multiple accounts, and I will do much larger size in some big accounts, and then I'll do, small stuff in other accounts. Doesn't matter. The percentages are the same. That's what we're going after, is a percentage, because I have no idea what size account people are trading. So 3 contracts, $1. We got 300. That's the most, $300 at risk. That's the most you can lose on this trade, no matter what, right? What can you make? $1,200 right here. Your max profit. If you're not familiar, sorry, I forgot to mention, if you're not familiar with TOS, this is off TOS, Thinkorswim, which is now Schwab. But the green line, that is what happens at expiration. And there's your 0 line. So if you're below that, you lose money. If you're above it, you make money, right? Pretty straightforward. I love using this Analyze tab all the time. I live on this thing all day long. I show it all the time. We're going to go in depth or more detail on this as well. But we got our delta, our gamma, our theta, our vega. Don't worry about that if you don't know what all that means. I use the deltas, or excuse me, I use the Greeks to manage the trades, and you don't have to, but it helps, right? Every little bit of edge you can get helps. So again, this is great, right? What if this stock gets bought out by somebody and you're way up here? Well, you're capped. If you would have bought a long call, now you're up here, instead of 1,200 bucks, you're at 12,000 bucks. It's the difference, right? So know when to use and when not to, right? And the last trade here is our old friend, the butterfly. You can't trade without butterflies, right? I like butterflies. They probably have the best risk reward if you set them up correctly. Um, there's some nuances to getting it right. Um, I like to use them when I do have a specific target. In other words, the stock's at 100. I think it's going to get to 120 and going to have, for example, and it's going to have a hard time getting much higher. Or, the stock, I'm just, a little chart here. Let's say we're here. I've got support down here. I've got resistance up here. Up right here is where you want to place the center of your butterfly, right? If you don't think you're going to overshoot it, that's when I like to use them. I don't like to use one if you think we might overshoot and this thing goes like this, right? Because you can be right and still might not make money. Now, I just set this example up in Netflix. Um, and of course, again, I'm everybody can size differently. It doesn't matter. Um, again, I don't have a preference over a big or a, quote unquote big or small trade. I do a lot of SPX trades with 100 contracts or 200, whatever. It doesn't make any difference. You can do them with one or two or three or five. The math is still the same. So butterfly trade, regular butterfly trade right here, right? 10 contracts. This is $2.88. So that's $2,880. Now, I mentioned this green line is what happens on expiration day when the trade ends. In this case, 22 August. That's when it's over. The pink line, again, if you're not familiar with TOS, is our T+1 line. That's what's going on today. That's where we are right here. And that's what your P&L will reflect right there. But in this case, if you risk 10 contracts, you did 2,800 bucks, your max profit there, that's 20,000, right? So you're pushing 10 to 1, $20,000 if you land, and I did the numbers, it came out to 1225 is where I think the price might be on August 22nd. We'll see. If you want to take that trade, and we'll see, and we'll compare notes. I don't know. But anyway, if you end up right here, on this day, yes, that's maybe a generous assumption. But the point is, I'm looking at risk reward here. If you notice here, the black and the light gray, this is where the expected move should take you. If it goes up, you should be between here and here. You got a 44% chance of being between here and here. If you're between there and there, you make money. So it's that simple, right? All right, let's move on. I'll show you some examples of each, and I'll try to speed it up a little bit, but this one, I want to show you a call diagonal trade. If it has a number here, that is done as a bias trade. I started with trade number 0 in 2013. We are now at trade number 1163, right? This one, one day we went in right there. We caught see that little gap right there? We caught a nice gap up one day, made $1,000 or 300% using a call diagonal. The one I was showing you that works like that, right? If you don't know how to do a call diagonal, you need to stick around because it is a cool trade. It is the sister cousin to a calendar, but it works differently than a calendar. All right. Another call diagonal. Again, this was in bias. We 1140 trade number 1146. Why did I mention this? Okay, I get the point. Diagonals can make money, right? 13 days. You're going to see a very common theme here. We're looking for a 14-day trade, right? This was 13 days, we made 30%. You may say, well, that's not that much, but we entered this trade right here. What were you doing when everything was free falling completely? The world was falling apart here in the market. We were entering a bullish trade here. We entered there and we came out there 13 days, 30%, right? Again, the point is I'm going to show examples all the way down and all the way back up. Doesn't matter what it's doing. I don't care. I make money going down, make money going up. You know, it's reading the market and seeing what we've got to work with, right? And what strategy you want to use here. I didn't want to open ourselves up to a lot of risk on this trade. And so in this case, we wanted something bullish without a lot of risk. If we're wrong and this thing tanked, like the example I showed you, $300 of risk to make whatever. All right. The next one is XLV. Remember, this is the start of the year. 2025 is right here, starting this way. The market's falling apart right here, right? Well, you have to trade what's working. XLV was working. It was going up. We're searching high and low, looking for things that work. We're looking for sectors that are going up and not going down. There's, I hate to quote him, but Jim Cramer's like, there's always a market somewhere, and I'll help you find it. Whatever he says, same thing. It can be the worst market out there. There's going to be something that's tradable and moving, right? even if it's to the downside. But in this case, it was to the upside, and we did a simple call debit spread, entered right there off that 34, came out up here. High five, we're out 47%. Move on, go find something else, right? The next one, Rocket Lab. We've been in and out of this thing. This has been a really good stock. In and out quite a few times. The reason I put this up here, 13-day trade, right? Can't hit them all at 14, but we're getting kind of close. So you see a pattern, right? Right off that 34 is where we entered. We came out here, 146% profit, high five. And yes, look how much we left on the table. In this case, this was a run into earnings. There were other things going on here, news-wise, with the big beautiful bill and all that kind of stuff. Yes, we left a lot of money on the table. We should have bought. We could have bought some long calls here, but I wasn't sure. I didn't know that stuff was going to happen, right? So I was trying to keep the risk limited and so forth. And that's just part of trading. Don't ever beat yourself up over leaving money on the table, because you never rarely catch the bottom, and you rarely ever catch the top. I heard John Carter say this one time. He's like, I can literally on 5 fingers on my hands during a year how many times I caught the bottom or caught the top. It's just not typical. All right. Generac, great trade. 13 days in this trade. Literally. I mean, I went back and looked at the dates on all of these trades, 13 days. We did a call butterfly. The butterfly worked out, gave us best risk reward. We entered there off 34, came out there. Now I did the same thing. Great earnings, and this thing is all the way back up here. So what? High five. If you cap it, that's great. Whatever. If you bought calls on it, that's great. You know, I'm happy with what I made on it and move on, because I'm trying to be consistent, right? A couple more. They don't all work. Here's a Costco butterfly. It was funny. I was putting this together and I'm like, well, I got to show some losers. And I was going back through and I'm like, I really don't have many losers, but of course, they don't all work. In this case, you see this, these are 34 EMAs. Come back up, touch, hold, and bounce and bounce and bounce. We came back down here to 34 and I said, this should bounce and we should keep going. These moving averages should go this way, right? And they didn't. We entered here for a bounce. And for a couple of reasons, you see that big candle right there. We came down and it just wasn't acting right. So we did a really small size. I did a one lot, literally one lot butterfly, and it broke down. And then these moving averages just puked and started coming down, and we're down, 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 down. It just didn't work, right? But we sized that thing so small, just it didn't matter, and that's the way you have to be on these trades. The next one that didn't work, TradeWeb. I still like this stock, just by the way, but anyway, came down, same thing, came down 34s. It looks like it's going to do something here, fire off to the upside. It did not. It kept coming. We entered right here, same thing, thinking this thing was going to bounce this way, and it broke below 34s, and I'm like, oh, that is just not good, and came back up. You see right there, it failed right off that 34, came back down, came back up, failed off that 34, and I said, you know what? Let's pull the plug on this. We have been in this trade 22 days, and I said, it's time. Let's get out. And we lost $100 on it, $105. You have to have some trade management rules in place, right? The next one here is Shopify. 12-day trade, 100%, 105% profit. Cookie cutter, textbook kind of trade here, entered right here, rocket launch off here. Perfect. Great trade, 12 days. Walmart, kind of same thing here. We came out, this is early in the year, the market's coming down here. Walmart retailers are going up. We want to be in consumer staples or things that are working. Walmart was working 9 days, you know, entered here, out here. Pretty textbook. That's trade number 1124. Most of these are bias trades. And then here, this is more funny than anything else. So Talon Energy, this is the big beautiful bill kind of stuff. Wanted some exposure there. We entered the trade here. I mean, this is a great trade. There's money coming in this stock. Everything was great. We entered here and it immediately started going south. You see that trend down, down, down. And I could not understand why it was going down. And all the other ones in the sector were going up and the money was flowing in and all that kind of good stuff, right? And same thing on this trade, we had a debit spread. We paid literally $1.35 get in, $1.35 to get out. 12 days. I said, you know what? Your time's up. 12 days. And I was thinking this thing kept going down, 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 down. If it breaks below that 34, we're going to be in one of these kind of situations, right? So I said, you know what? We're out. And we closed it. And 2 days later, it goes up 64 points in one day because there was a merger about to happen. We didn't know that. There was an acquisition in place, and I guess Wall Street wasn't sure if it was going to happen or not. It was very um, pro Talon, TLN. It was very pro, for them, for their business. And I guess Wall Street was like, this, if this deal doesn't happen, this thing might go this way, right? Well, instead, we got out and then it just rocket ship. Still a good stock. It's still going up, but again, we didn't know that, and that's just the way you have to be. You just have to be very methodical about your trades, right? So, bring it back full circle. 18.42 year to date, or annualizes about 36, 37, 65% win rate, 7% scratch, which is honestly that's pretty high, but I don't play around. If they start going against me, I'm like, you know what, we're out. And it's either like a literal scratch or maybe we make 50 bucks or lose 50 bucks. I count that as still a scratch. So 72% of the trades were in the basically the win or the scratch category, 28% loss. This again, I'm not like jumping up and down going, I need a trophy because I've been that rate 72, 74% for 20 years, long, 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 long time. And that's the way you want to be is, again, consistency, right? That's the name of the game. Again, the key is we're not guessing. We have a plan and the market doesn't matter. I don't care if it's going up or down. We can trade it. And again, these are not hypothetical. These are all real tests. This was these trades were in bias that were the 41 trades, all of those. So all those trades were posted and taken by us and all that kind of stuff, right? All right. So why does this matter now? And it always matters, but it mattered greatly in COVID 2020. It mattered greatly earlier this year, still matters greatly this year. Again, I don't think this scenario is going to change. Volatility is just picking up. News is moving speed of light and all that kind of stuff. Algos, high frequency, all that stuff, right? We know that. And markets are just not going to get less volatile. So you need to know how to do this. Guessing can be very, very expensive, right? The 14-day trade plan, I'm trying to remove the emotional decision making and make it more of a process so that, we don't have to worry. Um, and that keeps us from having to come in and guess every day, what are we going to do? Or what about this? What about this? You don't have to ask anybody. You know what to do, right? We don't want to overtrade. We want to focus on opportunities, whether they are up or down. A lot of these trades, not a lot, a fair amount we made profit on the downside, or we were finding kind of the honey badger stuff that's working as the market's going down. There's always money flows out of one sector and into another. We want to find the sectors flowing into, right? So I've told you about the three strategies that are the ones that I've used most this year, and really the last 3 or 4, 5, up back to COVID, they're really kind of the same strategies. Um, and again, they're fairly straightforward strategies, but I do have a lot of secret sauce in the way that I set them up and manage them and that type thing. You can go to YouTube and Google it or whatever, and be careful about doing that. Even if you don't listen to me, listen to somebody that's traded these things or try to trade them yourself. Just be careful what you get off YouTube because there's a lot of garbage out there, especially now with AI. It's crazy. AI is really cool. I embrace it. I love it. But there is a lot of things that aren't exactly correct out there that I see or hear people talking about, right? So it's one thing to look at a trade in hindsight and go, this was the best thing ever. Well, chances are it's not going to work the same next time based on the variables that you need to know, right? And what we're trying to do is know ahead of time as much as we can about how each trade is going to work and how to anticipate it in that, right? So the real power comes from being able to think through the trade ahead of time in real time, right? So that's what I want to teach you in this fund manager formula. So got a 14-day options income formula, how I make every trade decision, why and when to use each of the three strategies is very important. When not to use is as important as when to use, right? How to structure, how to size it, how to manage for consistent returns, and then how to avoid the old account killing mistakes, over trading, chasing, etc. And sometimes it's just simple mistakes, honestly. But the whole point is just to get more confidence in what you're doing, right? So the 14-day options formula main class is going to be next Tuesday, I believe. I think it's next Tuesday. And it's going to be a fantastic, very in-depth. I just skimmed the surface. We obviously don't have enough time to go into too much detail here. I would love to, but we just really don't have that much time. We're going to break down the decision-making framework, all the decision tree questions, right? I'm going to lay it out very straightforward, and we're going to evaluate, how to build that plan and that process in any kind of market, honestly. So after that, we're going to take each separate strategy. We're going to do a separate session with each strategy. We're going to deep dive into diagonals, deep dive into debit spreads, deep dive into butterflies. And again, you might say, well, I already know how to do debit spreads and butterflies, maybe not diagonals, but there is secret sauce with all of those as far as, how I like to use them at least. And there's nuances in the setup. There's nuances in we are going to talk a little bit about defending and how to make a profitable trade more profitable. That's pretty cool if you can do that. We do that. We try to do that a lot. I honestly am biased, but I would say this diagonal session alone is worth the entry price. So you get 4 different sessions with this. And again, we're going to go through step by step. I'm going to give you guidelines, all the stuff you need to make this work as a process. A lot of tips and tricks and things that, most traders honestly overlook. Okay, so 397, dirt cheap. That is dirt cheap. So and I've mentioned this, and if you're at Simpler, you already know this. So I do a mentorship from time to time, and we have a really deep dive. It's like a 6, 7 week process, but it's, $6,000 and that type thing. This gets you in the game right here for $400, 397. Again, I'm going to put checklists. I've got daily routines, everything you need when you walk away with this. And of course, I'm there to answer questions and help any way I can. There won't be a time limit. We'll stick around and answer questions, Q&A as long as you want to. If you are a Simpler member, you do get a discount. Make sure you logged in to get the discount if you're already a Simpler member. And if you want more information, of course, I try to cover everything I can. I know there's a lot to cover, but there's just honestly in a short period of time like this, there's not that much. I can't go that deep into a lot of the stuff. On each and every step along the way, we have decision trees with a lot more that we need to talk about, honestly, to get deeper and deeper into it to really fully understand it. But our team members at Simpler, they trade, they know what they're talking about. You can call them and ask them if you have questions on any of this stuff. And again, I'm here to help you. We do have an arrangement with PayPal. You can get interest-free payments with PayPal, 0% interest for 6 months. That's always pretty cool. And we do have time for some Q&A. And again, I'm going to be, I'm going to be helping you all along the way with this, with all the, step-by-step process, um, tips and tricks, guidelines, that type thing. I do daily routines for accounts and so forth and things to look out for and, landmines and that kind of stuff. So, um, let me go over here to the questions and see if what we've got and see if any way I can help you guys, right? Let's see. Why do I use 34 EMA? Okay, great question. So a lot of people, I'm really glad you asked that. So depending on what your time frame is, if you're looking at moving averages, here's the 5, here's the 13, here's the 21 or the 8, 5, 8, 13, 21, 34, 50, 100, 200. The 34 fits my time frame the best. And my time frame typically is, say 15 to 30 days out, that kind of thing, within a window of maybe a month, maybe two, depending on the market, right? So if you're trading much shorter time frames, you're going to be up here. My time frame is kind of here. If you are saying, well, I'm a buy and hold guy, if it comes down to 200, I'll buy it, your time frame may be here. So it varies depending on what your time frame is. And that time frame honestly will vary because some trades are shorter. Obviously, we can do zero DTE stuff. That's not really what we're talking about today, but I do those. And, the focus is on the 14-day trade. And I'm not talking about 14 days to expiration. I'm talking about being in the trade for about 14 days on average, right? So thanks for asking. That's a great question. Let's see the next question. What news website should someone follow? That is a great question. It varies. I like bar charts. There's FinViz. There's a simple Market Watch is good. There's a simple economic calendar on Market Watch. So I get my information from different places, honestly. A lot of it, honestly, you get on X, formerly known as Prince says, formerly known as Twitter. Um, and you follow some of these guys. I'm on there too. I'm trading Bruce. But you follow a lot of these financial guys, like there's a bunch of them, and they are always up to the minute posting charts and questions. And hey, did you see this on gold? And that blah blah blah. You get a ton of information off that. It's very helpful, honestly. So those are kind of the names I would say: bar charts, Market Watch, FinViz. I don't really have a. This is the only one I use. Um, but those are some that I use on a pretty consistent day. IBD, I do like IBD. Yes. Yeah. Thank you. All right. Um, let's see. Mark says, I like to sleep at night, prefer to day trade the SPX. Would strategies work in shorter time frames? Yes, they would actually. Now, let me clarify. They would. I wouldn't say day trading these, but I would say weekly trades. For example, you can put the trade on Tuesday for a Friday expiration in SPX. I do that all the time, right? Um, Day trading a little different. If you're doing ZT zero DTE or something like that, maybe futures or just SPX. But these strategies they could work on that shorter time frame. They're not ideal on like a daily, but you could use them on a little bit shorter time frame. Uh, Ashwin says, do you alert when you open and close trade? Absolutely. I think Mirza's answering that one as well. But in the bias service, yeah, absolutely. In fact, I'll send out a trade alert and it'll pop up on your phone or whatever. And in most cases, I try to give a heads up and say, hey guys, heads up. I'm looking at starting a bullish trade or a bearish trade or whatever in whatever, Tesla, doesn't matter, to make an example. So be ready in the next 15 minutes or something like that, just so, because I know everybody's working and you're playing golf or whatever you're doing, and that way you can kind of get ready. Entry and exit, and I will do a breakout session and talk about the exact thing we talked about today. And this is, here's why we want to look at this stock. Here's what the chart says. Here's why we want to take it. Here's the profit loss expectation, that type thing. Same process. Absolutely. Let's see. Ahmed, how's it going? If the option has not gone to profit, should you buy the shares and let it expire if it's in the money? Great question. I actually did that on Shopify a couple days ago. You can, depending on the account size, because if you're talking about Netflix and you have 20 contracts and it's $1,000 and you're trying to buy shares, it might be a little expensive. Um, In general, I don't try to buy the shares unless that's my plan to start, start up from the beginning. And I do buy stock, I do buy stock, and we'll write some cover calls every now and then, things like that. But the majority, again, I track that stuff, and the majority is what I'm talking about tonight with these three strategies. And I did want to mention, if you are on Thinkorswim, we're going to be talking about the Greeks, and I'm going to back up here a little bit. We're going to be talking about the Greeks and so forth. I really, really think if you're at any level trading, sooner or later you're going to have to know the Greeks. They're not that hard. A little bit of math, but not much. Pretty straightforward. I actually have a Greeks little short course out there. I think it's on YouTube for free, where I talk about the Greeks. But that's just a very kind of overview. But anyway, I'm going to go over that in these classes, and we're going to look at them. We're going to use the Analyze tab. It's so easy for me. I'm a visual person, to look at that Analyze tab and go, okay, well, it's easy for me to see what my risk reward is. How much am I going to lose if it goes this way, and where, and how much profit can I make if it goes there, and you have break even points and all that kind of stuff. So very, very, very helpful, right? And again, I will, when we do these classes, um, we'll stick around and, talk and answer Q&A and do all that kind of stuff. I want to make sure everybody is good to go before we, move on. Um, let's see, Tom, the income for the video or live session. Yeah, it will be an absolutely live session. Absolutely live session. Correct. And it's not a Saturday session. It's just, we're going to do it during the week. But absolutely, all the stuff's gonna be live. It will be recorded if something comes up. Again, I have kids, and and I'm I'm a much, much older parent to have young kids. But I know things come up, and you have to do this or that. If you do happen to miss it, it will be recorded. All right, let's see. Yeah, I'm looking at the same thing. It says 7A. I'm not sure on this. Honestly, I don't think that's right. Um, I think it's 5 to 7. I don't think this was updated, because it's supposed to be right after the market close. We didn't really want to do it during the open market, as far as, going over class and trying to learn something. We're not, um, live trading in these sessions. We will be setting up trades and stuff based on the real numbers, but all right. So I hope that makes sense. Let me see. Uh, Zephyr, if I'm saying that right. Apologize if I'm not. Yeah, all the courses are always recorded. Yes. Tom, great question. So Tom says, do you sometimes do double trades, like a double butterfly, double diagonal? Absolutely. All the time. Um, Double diagonals, double butterflies. I kind of have coined a name for the butterfly, and everybody kind of knows it's simpler. It's the Batman fly. So we may do a double butterfly like that. If you do broken wing on both sides, that turns into the Batman thing, and you basically have little or no risk here with two nice hefty targets here and nice wide trade. That kind of, it's easy to add on or kind of morph these trades, and that's actually one of the things we're going to talk about in these strategy sessions. So yes, and same thing with the diagonals. I do double diagonals, double calendars. Um, Fairly often. A lot of that depends on volatility. The calendar has the most exposure to volatility. The diagonal has the second most exposure to volatility. Butterfly really doesn't. Butterfly's got negative vega, but in general. But Kumar, let's see. Your strategy is applicable even in Indian markets or for Indian markets. They would be. Honestly, I have never traded Indian markets. I wish that I had or could, and I suppose I could at some point. The strategies themselves, as long as you have a vehicle, let me just say, as long as you have a vehicle that's tradable, um, and in this case, options with fairly liquid strikes or decent liquidity, you could trade it on anything. In other words, you know, these could be, you saw the names that I traded on here, but you could trade it on, GLD, or I'm just thinking, like ETFs. You could trade on anything, Amazon, Nvidia, it doesn't matter. So I'm assuming, I'm kind of going out on a limb here. I'm assuming that those would still be applicable to Indian markets. I don't see why they would not. All right. Rich. So yes, bias is separate from the class here that we're doing. However, during the class, I know that we're going to offer um, a trial run of it in some form. So, and that we can see it and I look under the hood and then see if it's right for you and it makes sense and all that kind of stuff. Um, so I hope that makes sense. All right. Do we have any more questions? I don't see. Kumar, do you implement these strategies both in options and equities or only options? Both, both. Now, what we're talking about primarily are options trades. However, we could, when we go on the decision tree, the wheel with the five parts, you could take those, you could say, take that same strategy and go, I don't want to buy options because maybe I want more time. And you could apply it to entry points on stocks. And sometimes we honestly do that. If in like in a case we're trying to catch a dividend or something, we may just buy the stock instead. Um, but the core of what we're talking about is going to be the options setups, right? And again, the first class is going to be kind of how the process works. Come on, yeah, you could do anything that's tradable, like, and I'm saying GLD or gold or SLV silver, things like that. Um, as long as you could either buy the stock or the ETF, or if it has any liquidity to speak of, you could always do the option setups, especially ones like debit spreads and butterflies are very, very um, applicable to pretty much anything. So I hope that makes sense and hope that helps. Um, YT, so YT saying, would you short gold here? I don't know. I honestly don't really trade gold much. I used to. Um, but it's kind of, here's the best way to think about it. Honestly, um, especially if you traded in for not you, we all know that what we're good at, right? And I know what my lane is, and this is my lane. I don't really try to trade Forex, and it's kind of like, if you're a great heart surgeon, can you still be a great brain surgeon? Maybe, you know. But I like to focus on what I like to trade and what I'm good at, so I don't get on the fringes too much with trading other stuff like that. I'll trade some futures for hedging and maybe a little opportunity every now and then, but I really stick to what we're talking about here. Kirby, yes. So we're going to talk about indicators. There is yeah, absolutely, during the trading, we're going to talk about indicators, and I'm going to give you guys some free ones or show you how to find them. Um, I'm probably different than most people because of the time frames I'm trading. I don't need super high level, you know, extremely precise indicators. I'm just looking for support and resistance. You can do that kind of stuff with moving average and some of the other stuff, ATRs and so forth. And we've got some that are free, and that's really, I'll show you exactly what I use, and none of them are um, complex and super crazy low time frames, right? Now, if you are like day trading futures and stuff like that, yeah, that's different. That's completely different. And you do need more kind of robust or heavy duty indicators. I don't I don't trade those time frames, right? So I don't need those indicators, right? And it's funny, people look at my charts and they're like, it looks kind of plain or bare, and I'm like, that's by design. I don't want a bunch of indicators, right? So anyway, thanks for the question. I'm glad. Thanks for asking because I kind of forgot to mention the indicators, but that will be part of what we're going to talk about. Oh, John, thank you. I appreciate that. Yeah, we've been around for a while, and again, started Bias in 2013, and man, time just flies by. It's crazy, crazy, crazy. My oldest daughter was just born when I first came to Simpler in 2012, and yeah, it's just man, time flies. Crazy, 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 crazy. Cesar. All right, all right, all right. Yes, 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 yes. Seize the day. Yes. Good to see you in here. I appreciate that. All right. Well, let me wind it up here unless anybody's got any other questions. Oh, question, do we do iron condor trades? Yeah, yes, but not right now. So this is kind of a side note, funny story, I guess. So I'm looking back at the bias trade. I track all the trades, and if you get into Simpler and you do end up coming to bias and all that kind of stuff, you can go back to 2013 and see every single one of those 1100 trades we've ever put on. You can see the exact entry and the exact exit and all that stuff. So I went back and tracked, and one of those years, I can't remember, the number one trade was Iron Condor. And I'm like, well, that's kind of weird. And then I look at the market because I don't feel like I use it that often. The the good and the bad about an iron condor, very high probability trade, 85-ish% kind of average setup range, probability of profit. But you risk four to make one on average. So the risk reward's horrible on an iron condor. Your probability of making money is pretty good, right? In this market with gapping up 100 points or gapping down 200 points, you could get blown out of a condor so fast. I've kind of put that, it is one of the tools in the toolbox, but I kind of put it on the back burner and I don't use it as much. Now we'll use credit spreads occasionally, but I love a condor, just like everybody else, but this is not the ideal market in general. There's certain situations where it works, but yeah, so I hope that helps. I'm not anti condor. It's not, it has not been that consistent, and you got gap exposure there that I'm not real crazy about. Ashwin says, do you take adjustments in your strategy? I absolutely do. Um, we are going to talk about some of those. Now I have in the past done, a lot more heavy duty, adjusting, defending, all that kind of stuff. And we're not going to go that deep, but we're going to get into some quick, easy fixes, to if a trade goes against you, how can you make it better, or reduce the risk, or maybe even increase profit, that kind of thing. So yes, we're gonna talk about that. So, but and I mentioned doing that mentorship class. So I do a whole like 2 hour session just on defending trades, and we're not going to do that on this one, just because I don't think it's necessary. If the trade's not working, we sized it the way we want it. We just pull a plug on it. We just do something else, um, within reason, right? Total, absolutely, absolutely. Cesar, dear suggested break a butterfly. Absolutely, break a wing. Absolutely, yeah, yep. That is one of the tweaks to a trade we're going to talk about. That's a great way to do it too. So basically, you could take a regular butterfly, break a wing on one side or the other, in order to not overshoot it, and that's a very good thing to know how to do. If you get in a situation where you have a runaway stock in a good way going in your favor, you can kind of keep the trade on and break a wing. But yes, I do. I do. Let's see. All their strategies beyond simple call and put. Can you send us alert such way we can easily understand? Oh, absolutely. So when I do send the alerts, if you are on toss or think or swim, you can actually copy and paste the actual trade into your platform so you have it exactly and you know it's correct. Plus, we'll go over it on the Analyze tab, and I'll show you if it doesn't, I'll show you how to do that, one, and if yours doesn't look like that or your numbers are way off, then something's not right. So we're absolutely going to go into all that detail. And thanks for mentioning that because I forgot to mention that as well, that we're going to talk about setting up the trades and all that kind of stuff. So, all right. Cesar, I do like San Diego actually. Would be nice. I went to a CBOE risk management conference in San Diego about 3 or 4 or 5 years ago. Pretty cool. All right, all right, all right. Well, Kumar, you're right. Ciao. I appreciate it. I appreciate everybody being here. Um, yeah. Zephyr, again, I hope I'm saying that right. Yeah, copy and paste the trade. Super easy. No, you won't get it wrong if you do that. And then again, you look on the Analyze tab and say, does this look like that? Do these numbers say the same thing that we're trying to get or accomplish? So we're going to make it super easy. All right, guys, I was trying to keep it as short as we could. Um, I appreciate everybody being here. Consider this, try to come to this class. It's well worth your time. I think this is a really good value. The price is not bad, honestly. This is not bad at all for 4 complete separate sessions. We're going to do Q&A and all that kind of stuff. And you're going to walk away with a lot of good information and good material you can take with you. You'll have all the notes and tips and tricks and all the kind of guides and so forth um, to take with you. So with that, let me wind it up. Let us know if you have any questions. And I hope to see you in the class next week. It's going to be fun. We always have a lot of fun. So thanks for the time, guys. I really appreciate it. Email or call if you have any questions. And if you have something very specific for me, they can get you to me. Um, but just let us know and we'll help you any way that we can. Oh, and my email is Bruce at simplertrading.com. So it's just straightforward, Bruce at Simpler Trading. So let me know. All right, guys. Thanks for time. I appreciate it. And I will see you guys in the class. Thanks. Take care.